Yeah, hi, it's Jason Hurft here. Just here in the beautiful Dandenong Ranges. Thought I'd just bring you a video on lender's mortgage insurance. I just want to go through what it is, what it isn't, and if you should have it or not. A lot of people keep asking me, especially first homeowners, they always ask me about lender's mortgage insurance. So let me tell you what it is first. So when you borrow over 80% of the value of a home, what happens is you get hit with what's called lender's mortgage insurance. Now, the maximum you can borrow against a home these days is 95% of the value. So the higher you go up to 95%, the more the lender's mortgage insurance is. It's a once-off fee that the bank charge you. Now, what it isn't is protection for you, the borrower. That's something that a lot of people mistake. They hear mortgage insurance and they think, great, I'm protected, something goes wrong, they're gonna cover me. Not true. The key here is the word lenders at the start of it. So lender's mortgage insurance. That means that if you default on your property, on your loan, and they have to repossess your property and they make a loss, then they're insured to cover for the loss. That's pretty much it. So for that privilege of you borrowing money off them, they charge you lender's mortgage insurance if you go over 80%, as I said before. Now, a lot of people are a bit sort of umming and ahhing, should I do this, should I not do this? How I look at it, it's a cost of doing business. So just like stamp duty, the government charges you a tax called stamp duty when you buy a home, you have to pay that. Now, a lot of people, especially first homeowners, are found lately stay out of the market for a number of years because they're wanting to save up that 20% so they don't get charged lender's mortgage insurance. Now, it's a good idea and it's a wise move to have that 20% deposit, but then you've got to weigh up a few other things. So if you're paying rent, for example, that could be about $15,000 to $20,000 per year that you're paying somebody else because you're now waiting for that 20% deposit. Not only that, if you calculate what you're missing out on each year, such as the capital growth, so for example, in a $500,000 home, just say it goes up by 4% each year, so very conservative figures, that's about 40 grand each year that you're missing out on, plus the rent. So you're missing out on a lot of capital growth, plus you're paying a lot of rent, just so you can avoid this once-off fee of mortgage insurance. Now, for me, that doesn't really make sense. If you're doing it for the sake of you want to have a buffer in there, so in case something goes wrong, that you've got some equity, that's a good move. That's the wise decision to do. But if you're just wanting to avoid paying that fee for the sake of avoiding it, then you're actually losing out way more on the rent and the missed out capital growth that you could have got by being in the property market. So it doesn't really make sense. So for me, most of the time I advise my clients, there's many ways you can do it. There's mortgage insurance, there's guarantors that you can get from a family, there's gifts you can get deposited for you, there's ways and means around it. So if you're worried about trying to get into the property market, and it's getting harder and harder because the prices are going up, the good thing is in Victoria, as I've said in one of my previous videos, that they've abolished stamp duty for first homeowners up to the purchase price of $600,000. So now is a great time to get in. So if you can get in now, you can avoid that stamp duty. You'll have to pay some mortgage insurance, but at least you're in. You're no longer paying rent, and you're actually having that equity, that value of that home growing for you. So you're actually putting your money to good use. So that's what mortgage insurance is in a nutshell, in a Austin Powers in a nutshell kind of thing. And in my opinion, it's a necessary evil. It's a cost of doing business. You shouldn't be too afraid of it. If you want to save up the 20% because you want the buffer, that's a good idea. But if you just don't want to pay that fee because you're worried about losing money, well, you're actually losing money by not being in the property market. Simple as that. It's a brutal but honest truth. So I hope that helps. Let me know if you have any questions regarding that at all, but I just wanted to get that out there because it's one of the main questions I get asked all the time. So have a wonderful day. It's been a pleasure talking to you again, and I'll see you soon.